Time for business. Kate Moody joins us, starting with a huge jump in consumer prices in the US of A.
Inflation soared at its fastest pace since in over a decade in the month of April. The consumer price index jumped 4.2% compared to a year earlier. That's the fastest pace since 2008. Prices rose 0.8% compared to the previous month. It's the second consecutive month of high inflation in the U.S. The Federal Reserve has said it will not raise interest rates or reduce its monthly bond purchases in a move to try and calm that inflation because it believes that the numbers will settle closer to its 2% target within the coming months. Well, that inflation data piled more pressure on Wall Street. After taking a breather on Tuesday, the tech-heavy Nasdaq tumbled once again over 2.5%. The Dow Jones losing 680 points at the close as it continues its slide, its worst session since January. The S&P 500 also slipping away from its recent records. Earlier, the major European indices managed to rebound slightly as strong corporate results lifted trade. Investors were also encouraged by a strong upwards revision in the forecast for economic recovery in the Eurozone. Well, earlier I spoke to Christian Lawrence, senior market strategist at Rabobank in New York, about the link between inflation and the market sell-off and why investors are so anxious.
I think the link comes down to interest rates. Tech companies in particular enjoy an environment of very low interest rates. And essentially, the stock market is concerned that rising inflation won't be transitory, as the Fed is suggesting at the moment. And in fact, the Fed may be forced to raise interest rates earlier than expected. And this is one of the main factors that's really driven that sell-off that we've seen in tech stocks over recent days.
The EU's second highest court has ruled against a European Commission decision to seek 250 million euros in back taxes from Amazon. In 2017, Brussels had found the tech giant was given special tax treatment that amounted to illegal state aid in Luxembourg. This decision could still be appealed to the European Court of Justice. It comes as talks on an international framework for taxing multinationals gathers steam. French President Emmanuel Macron has urged the International Monetary Fund to renegotiate $45 billion worth of debt owed by Argentina. President Alberto Fernandez is trying to drum up international support from European leaders and get some breathing room for an economy already deep in recession. Luke Schrager reports.
A working lunch at the presidential residence in Paris. On the menu for the French and Argentine leaders, the question of the South American nation's long-running debt. Buenos Aires is currently seeking to push back and restructure an economic aid repayment to the IMF, something France supports.
Nous souhaitons que l'Argentine parvienne dès que possible à un accord avec le Fonds monétaire international pour un programme permettant de rétablir la stabilité macroéconomique du pays.
Y yo quiero públicamente agradecerle al presidente de Francia porque en todo este tiempo siempre Francia nos acompañó. Gracias.
Merci beaucoup.
The Argentine president wasn't just in Paris either. He made the visit as part of a marathon diplomatic tour across Europe, and it's borne fruit for Alberto Fernandez as he picked up support in both Portugal and Spain for his initiative ahead of negotiations with the IMF. The stakes are enormous. Over the next 3 years, Argentina's due to pay back almost all of the $45 billion it borrowed in the face of crushing economic woes under the previous government of Mauricio Macri. It's left the country in a race against time and raised the spectre of another default on payment after it defaulted last year for the second time in 2 decades to a group of private creditors. This against a backdrop of a third consecutive year of recession and a 12% plunge in GDP last year. After years of austerity, the Argentine government is looking to do everything it can to avoid similar measures, with 42% of the population now living in poverty.
France is reportedly set to delay the EU's post-Brexit agreement on financial services in retaliation for an ongoing row with the UK about fishing rights. Bloomberg and Reuters say Paris is preparing to link the two issues in discussions with Brussels. The dispute escalated last week as military ships were deployed to the Channel Island of Jersey amid protests by French fishermen. They say they're being blocked from licenses that would allow them to fish in British waters, as outlined in the Brexit trade deal. A French government spokesman has said that Brexit issues are all related and cannot be viewed separately. Of course, Mark, fishing was one of those sticking points in those years of Brexit negotiations. And even though the trade deal has been ratified on both sides, it's clear it's still making waves.
Indeed, still causing controversy, still making waves, as you say, not just little ripples. Kate, thank you very much indeed. Kate Moody with all the business. Excellent as ever. Time for Focus, a small